Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 6 o'clock in New York on Wednesday, 31st day of January 2024, and this is the evening report for gold and silver. Traders, today was Fed Day. This was the conclusion of the first FOMC meeting of the year, where there were three major takeaways from the statement as well as comments by Chairman Powell during the press conference. First, the Fed decided to leave rates where they are, which is between 5.25% and 5.5%. No surprise there. Secondly, they took an important component out of the written statement in that they X'd out where they addressed the need for more rate hikes and what criteria was necessary to do that. They struck that completely from the statement, in which we can now infer there will be no more rate hikes, all things being equal. Lastly, they put to rest optimism of a rate cut coming as early as March. Gold had a volatile day with not that much change. You can see that it is currently trading overseas. That is this little red line here, but it's not that much bigger than our daily chart in terms of the real body, the differential between the open and closing price. Currently, gold is trading off roughly 80 cents from the close in New York. The close in New York finished higher by $2.40, 0.12%, but it is the high of $2,074.60 that I find interesting. To really get an idea of what occurred today, we will pull up a 30-minute candlestick chart to really illustrate the price swings that we saw in gold and the fact that it closed in essence unchanged. We need to look at a 30-minute candlestick chart, which is what I have up currently. This one arrow right here signifies 8 o'clock Eastern Time, when the Federal Reserve released the written statement from the two-day Open Market Committee meeting. What would follow was a typical knee-jerk reaction that we so often see when the Federal Reserve convenes an FOMC meeting, and that is, for approximately 2 hours, we saw gold rise dramatically from the price at the time of the statement's release up to the daily high that occurred 2 hours later at 2,074. What followed would be a methodical decline in pricing that occurred over multiple hours up until the low was reached. This would be 3 o'clock Eastern Time, when gold traded to a low of $2,048.60. In essence, this is our closing bar here after the close in New York and subsequent trading in Globex. And you can see it is approximately a couple dollars above the fixed price at the time that the statement was released. Currently, we are trading in Australia with gold sitting at $2,058.10. On today's show, I do want to focus on an updated Elliott wave count. I do want to thank one of our subscribers, Dan W., who was kind enough to send me a chart with the primary count from Elliott Wave International, because I do consider Elliott Wave International and the counts they produce pretty much the gold standard. That being said, I draw your attention to the price low that occurred in 2016 when spot gold hit a low of $1,040, which marked the conclusion of a multi-year correction and began a primary fifth wave, which is currently in play and has not completed. We have completed wave 1, wave 2, wave 3, corrective wave 4, and we are currently in the fifth wave with our sub count in wave 3 of 5, which means according to our Elliott wave count, we will complete the third wave, which is still active, go into a fourth corrective wave and a final fifth wave, all the sub count, which will complete a primary fifth wave. On the next couple of shows, we will talk about our projections for the conclusion of this sub count Wave 3. The dollar continues to be definitively range-bound. If we take a look at this key area at 103.42, we can see that for the most part over this last week, the dollar has remained roughly at this price point with the index above 103. The volatility that we saw in gold with the aggressive high that it made and the inability to sustain that price point was not evident in silver. Silver did close lower for the second day in a row. This is the New York close, in which silver closed off by approximately 5.5 cents, closing at $23.17. It is now trading overseas at $23.04, a little bit below the New York close. When we look at this daily chart, we see that silver remains under pressure. While I believe that on an interim term basis, I am still bullish on silver, we could see a continuation of the dip that really began yesterday. We have moved our stop to $22.89. That is just above the low today. Currently, we are at 23.01.5. If we are knocked out, we will be knocked out with a small profit. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.